I think it is exactly that. I think it is a replacement to gold. But again...
But you like gold. You're saying you like non-productive assets.
I like in a portfolio, again, my portfolio is 99% risk on, 1% risk off. And in that 1% risk off bucket, I think that something like Bitcoin is really important. Why? Because it is not correlated to the rest of the market. And the biggest thing that's changed...
You do not believe that the success of Bitcoin over the past several years has been correlated to the market? I would say not directly correlated, but clearly so the idea that there's as much liquidity and cash sloshing around in the world has allowed people to buy into Bitcoin in a way that they wouldn't have, frankly, if the market...
That's different than being correlated to a strong economy or earnings.
But there is
that's a liquidity argument. That's not a correlation.
I've been in the Bitcoin market since 2012. And I feel like I'm in two different universes. I need a passport to go between the Bitcoin world and my regular world. These are not the same people. And what I would tell you is the people that owned Bitcoin in 2012 all the way up to now, the majority of those people view it as a hedge to the traditional financial infrastructure. Whether that's true or not is unclear, but that's how we've all viewed it. Separately, what Joe says is absolutely right. There's a big difference between correlation and liquidity. And the reality is all of these financial assets in the traditional markets are fundamentally correlated. We saw that in 2007. Everything broke down. Things that we thought were hedges went away. And so I think it's really important to not forget what happened there. So in 2018 or 19, heaven forbid we go through another cataclysmic financial event, we are going to see the same fundamental correlation. And so again, I ask, why would it not make sense to have a non-correlated hedge? For a small amount of this is about buying insurance.
He brings up a great point, and unfortunately, as you can see in this graph, cryptos have not been a hedge, or they've actually correlated a lot to the stock market. But my belief and his belief is that if there's a financial crash, it's not going to be correlated, and in fact, there's going to be a rush to crypto assets. And if you do have a chance, please check out my channel. I've covered Max Keiser. He does a great job of kind of going into it in further detail. But this is another person that also agrees with Max Keiser, and I also agree with Max Keiser that if there is a financial collapse or a financial recession, a lot of people will start to believe in cryptocurrencies, trust in cryptocurrencies, and it should be a hedge to other markets. But it hasn't happened yet, so only time will tell. And this is a great topic to debate. So obviously, if you're watching this on YouTube, please leave some of your comments, your opinions on this. It would be great to kind of just discuss this. I'm going to be making more videos in the future to kind of just go over it. But right now, historically, it hasn't happened, and we really do need some sort of financial calamity that he's mentioning in 2008 or 2007 in order to really see what will happen. And no one has a crystal ball. No one can tell what the future is. So let me know your thoughts on this, and I will talk to you guys soon.